Welcome back. You're still tuned in to Midcap Radar. Let's talk about Cosmo First. Recently reported their Q2 numbers. It was a good set. They saw their revenue rise 14%, while EBITDA surged 41% on a YY basis. To discuss this and more, we are joined by Neeraj Jain, Group CFO at Cosmo First. Neeraj, good afternoon. Thank you so much for joining in. Well, is it fair to say now that the cycle is turning into the positive terrain now and there will be a sustainable growth going forward? What are the realizations looking like? Have they seen an uptick on a YOY and on a quarter-on-quarter basis? And does this phenomenon continue?
So good afternoon and thank you very much for having me. As you rightly mentioned, of course, there is a uptick in the margins for the BOPP and BOPET, both different. But having said so, what is also working favorable for us is the growth in the specialty film. In the Q2, we have reached 70% of our volume coming from the specialty film, which has grown 13% on a year-on-year basis. So which is working very well for the company. For the BOPP and BOPET spread also, there's an uptake of between 30 to 40% because the demand-supply gap which got created in FY24 is getting bridged, and we are optimistic about the margin going forward.
Neeraj, good afternoon. Thank you for joining in. If you're optimistic about the margins going forward, could you share a figure as to where do you expect to year the end with? The first half, your margins stood at around 8.9%. Do you see to end the year by double-digit margins? And also, if you can share a picture on the volume growth going forward.
Well, in principle, although we do not provide any guidance, but overall what I can share is if we look at first half of the financial year, we have already doubled the PAT level compared to last year. And I do not see any reason why it should not replicate in the second half of the year.
Okay, so you will be able to see doubling of PAT even in the second half. So you can say safely that 150 crore rupees of PAT is something which is doable in this year?
Well, no specific number, but yes, broadly, the things are looking positive.
Okay, so was this improvement led just by realization improvement, Neeraj, or did you see volume growth as well? If yes, how much was it in Q2? And as my colleague asked, what is the number that you're looking? If not a specific number, is it high double digits, high single digits? What is it that you're looking at?
So there's a volume growth, of course, beside the margin growth. But having said so, the margin is working more favorably because of the specialty sales growth. Having said so, our new businesses, whether the specialty chemical or the rigid packaging, all are taking shape now. Specialty chemical has reached high teens EBITDA level and more than, in fact, 30% return on capital employed. Beside this, rigid packaging vertical is also doing fairly well. We have reached 100 crore rupee of the run rate of the top line, which we expect to close the year close to 150 crore rupee of the run rate top line.
So was this improvement led only by the specialty sales, or was it a mixture of commodity sales and specialty sales? And if you could share a mix, the split between the two, and do you expect to sustain that number in the second half as well?
So 70% of the sales came from the specialty in the Q2, which is working favorably. Beside this also, as you said, from the mix perspective, it is favorable. And beside this, the other businesses are also helping. Having said so, if you look at the part of the growth is coming from the volume, part is coming from the higher specialty sale, and part is coming because of the uptick in the base commodity BOPP from margins.
Got it. Take that point. So that's about your films business. Let's talk about the pet care business because that is something that you're bullish on as well. What was the GMV, the monthly GMV that you saw? Will it improve in the second half? And have you broken even here?
Well, Ziggly is taking very well shape. So if you look at the Q2, we have focused on two particular aspects. One is the vet services. We wanted to make Ziggly more focused towards the services. And second is we have launched a couple of private labels. So these two factors are helping us a lot. We have already reached close to 4 crore rupee of the monthly GMV. And yes, I mean, although break-even EBITDA is not yet achieved, but we feel that it's not very far off. Between 150 to 200 crore rupee of the top line, we should be able to achieve the break-even EBITDA for the Ziggly operation.
Well, and is that possible in the second half of the year, Neeraj? And the last time you spoke to us, you had mentioned that Zigli was growing at the month-on-month rate of 7%. What has been the month-on-month growth rate this time around?
The month-on-month growth definitely remains broadly in the same direction. Having said so, second half of the year, break-even for the Zigli may not be possible, but it should happen in maybe next 2 years' time.
All right, that's about Zigli. Let's talk about the specialty chemical subsidiary. How big is it in terms of size? Because you spoke about it in Q1 that you will be commercializing multiple chemistries, including adhesives, coatings, master batches as well. How much EBITDA is coming just from specialty so far? And how do you look at it contributing going forward?
So specialty chemicals business for us is close to 200 crore rupee of the top line, if I look at the run rate. And it's high teens EBITDA, and as I said, 30% plus return on capital employed. In the medium term, we see this business taking shape close to 500 crore rupee of the top line business. If you look at the Cosmo overall, one is the flexible packaging is growing because we are adding close to 40-45% new capacity, which should commence operation from the next financial year. One is this. And on the second hand, the other new business verticals are growing rapidly. So we are fairly optimistic for the growth of all these verticals. What we are looking at in the medium term is maybe 20% of the top line coming from new business vertical and 80% come from flexible packaging.
Neeraj, since you mentioned Zigli will break even in the next 2 years, it would have grown substantially on the top line front by then as well. So what do you see the business 2 years down the line in terms of its mix? How would you divide that between packaging, specialty chemicals and pet care over the next 2 years? How do you see that going forward?
Well, Zigli, as we said, break-even should happen close to 150 crore rupee plus of the top line. We are aspiring to reach at that number maybe in 2.5 years or so. The other businesses taken together, as I said, today it's close to 10% of the top line. What we see these businesses to take the shape maybe 2 years down the line, 20 to 25% of the top line should come from the new business verticals, including Zigli, and 80% remains flexible packaging business.
Okay, take that point, Neeraj. Seems the street is liking what you're saying. The stock is spiked to the day's high. It's up 3% right now. So positive commentary coming in and some improvement that we are seeing after some quarters of losses at the EBITDA level because of what was happening in the packaging business. With that, we'll slip into a break now. When we come back, we'll talk about markets and stock-specific action on the other side. Stay tuned for that.